Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. If you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. There you could also sign up for some special reports that we offer that gets delivered to your inbox. Today's income pick, Suncor Energy Inc., traded on New York Stock Exchange under symbol SU, is an integrated energy company with an excellent balance sheet that is generating lots of cash, which helps fuel its industry-leading cash return, which include its reliable high-yield dividend and share repurchase program. And thanks to record oil and gas demand and consumption and rising oil prices, the outlook for Suncor Energy remains tremendous. John?
Yeah, thanks, Mo. Suncor Energy is a Canadian-based integrated energy company with operations around the world. The company's operating segments include oil sands, exploration, production, and refining and marketing. The oil sands segment includes the company's owned operations in the Athabasca oil sands region in Alberta, and it's here that the company explores, develops, and produces bitumen, synthetic crude oil, and related products.
John, I think before we go into any details, I think it'll be a good idea if we can explain what oil sands are.
Yeah, that's a good idea. What many people may not know about Canada is that it's home to the world's third largest oil reserves behind Saudi Arabia and Venezuela. But Alberta, which is a western province in Canada, is floating on oil sands, giving it the fourth largest oil reserves in the world after Venezuela, Saudi Arabia, and Iran. Now, Alberta is similar in size to Texas, and Alberta's oil sands proven reserves are equal to about 160 billion barrels. Now, what are oil sands? Oil sands are naturally occurring petrochemical that can be upgraded into crude oil and other petrochemical products. At room temperature, it's similar to coffee grinds and molasses or silly putty. Now, because of the thick nature of the oil sands, it must be processed before it can be refined to produce gasoline and diesel. At 54,900 square miles, which is a little larger than the state of Wisconsin, the Athabasca deposit, which is where Suncor is located, is the largest, most developed oil sands project in Alberta. And for the record, oil sand deposits can also be found in the US, Russia, and Venezuela.
Let's go back to what Suncor does now.
Yeah, the company's exploration and production segment includes offshore activity in the east coast of Canada and the United Kingdom. The refining and supply operations segment includes refining crude oil and immediate feedstocks into a wide range of petroleum and petrochemical products. Its pipelines crisscross Canada, and they go through the central and western parts of the U.S., making their way down to Houston. Suncor also owns Petro-Canada, which is a big network of more than 1,800 retail and wholesale gas stations located in Canada. Meanwhile, the corporate and elimination segment includes the company's investments in renewable energy products and other activities. This includes Canada's Electric Highway, which is a coast-to-coast network of fast-charging EV stations.
And I read that their second quarter earnings topped Wall Street projections.
Yeah, in August, Suncor announced its financial results for the second quarter, ended June 30th. Now, they're a Canadian company, so they're reporting in Canadian dollars. At the time of this recording, one Canadian dollar equaled about 73 cents US. So getting back to the financials, Canada's second largest oil producer reported adjusted earnings of 1.25 billion or 96 cents per share. Now, that's compared with 3.8 billion or $2.71 per share in the same period last year. Analysts were calling for adjusted earnings of just 82 cents per share. Net income, meanwhile, was 1.87 billion or $1.44 per share. And that's compared to 3.9 billion or $2.84 per share in the second quarter of 2022.
John, why are earnings down?
Well, the Suncor is joining its global peers in reporting a big drop in quarterly profit as oil and gas prices have pulled back from last year's big peak. Global oil prices were down in the quarter from a year ago, earlier, as regional banking crisis in the U.S. and fears about a possible recession raised concerns around demand. That industry dynamic has changed in the third quarter. Global oil demand hit a record 103 million barrels per day in June, and it's expected to hit a new record in this past August of up to 103.6 million barrels per day. Meanwhile, looking forward to 2024, oil consumption is expected to remain near record levels around 1 million barrels per day.
All right, John, now let's get back to financials.
Yeah, so cash flow provided by operational activities was 2.8 billion or $2.14 per share, and that's compared to 4.23 billion or 3.01 per share in the prior year quarter. Suncor ended the quarter with net debt of 14.3 billion, which is actually down 1.32 billion from the end of the first quarter of 2023. Now, during the quarter, total upstream production rose actually 3%. It also completed all major planned maintenance across all of its facilities.
And despite lower earnings, it's still home to one of the best dividends in the energy sector. What do you have to say about that?
I'm going to agree with you. Exactly. Yeah. Suncor's strong cash generation helps fuel its industry-leading cash returns to shareholders. For example, in 2021, it increased its annual dividend 100% to $1.68 per share, while it increased its annual dividend 24% in 2022 to $2.08 per share. With regards to share buybacks, in 2021, it repurchased 6% of total shares, and in 2022, it purchased a further 8%. In this past second quarter, it returned a total of $1.4 billion to shareholders. Of that, $684 million were in share repurchases and $679 million were in dividends. Now, through the first 6 months of 2023, Suncor has returned approximately $3 billion to shareholders. Of that, $1.55 billion in share repurchases and $1.36 billion in dividends. Most recently, this past August, it declared a dividend of 52 cents per share, or $2.08 on an annual basis, for a current yield of 4.50%. Now, if you look at the company's chart and dividends, you'll notice that the dividend payout fluctuates a little quarter to quarter. That has to do with the exchange rate, not the company's lowering its quarterly distribution.
John, given the tailwinds in the energy sector and the amount of earnings Suncor is posting its dividend, how is the Suncor stock doing?
Yeah, Suncor stock is doing really well this year. As of this recording, Suncor stock is actually up 13% year to date and 14% year over year. Gains of that could be like just the start. Wall Street analysts have provided a 12-month share price target for Suncor stock of $39.45 per share to $44 per share.
All right, John, thank you so much for your analysis. Just to recap, Suncor Energy is a great integrated oil and gas company with a big footprint across North America. It has an excellent balance sheet, and it is home to industry-leading cash returns, which includes its reliable ultra-high dividend. Its second quarter profits are down, just like its peers, but the outlook for oil and gas demand and consumption remains robust over the coming quarters, which should help further juice its dividend and share buybacks. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.